Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick with you this morning. Well, I guess trade talks are going well because everything is up, oil up. No thanks to, actually, because of a overnight attack on an oil tanker. But trade talks going well. Market's doing okay, but this ridiculous market is continuing here. So we'll talk about the moves from yesterday's session, over moves, and how we're shaping up into today's session. Again, the analysts are busy. A lot of upgrades and downs to talk about today, so we'll get to as many of those as we can. A couple earnings as well. And our guest today, Joe Saluzzi, partner and co-founder of Themis, trading market structure expert. He would join us at 8:35. Joel, give us some overnight levels here if you can.
Pre-market high, that's what I'm going to give you, is 29.74. If you're looking for targets beyond that, your September 30th close, the close to end September, 78.50, 29.78.50. And then you got some daily highs up there, 86.25. And then we had multiple highs at the 29.95 area. See if we can get there today. Crude in the green by 83 cents. A little bombing of an Iran oil tanker has crude back up off the $52 area. Gold, who needs to own gold when the market's up, down 12.20 at 14.8870. Silver down a dime at 17.50. Bitcoin in the red, down 2.95. Let's bring in Triple D and see what he thinks to this rally.
I don't think too much of it, to be honest with you. I'm hedged, my trading portfolio, so I'm okay there. I mean, it's 3 days. We're straight up since the China talks apparently had broken down, and then the White House obviously said other things. Trump propped the market up again yesterday with his comments that talks went very well. So we've had back-to-back days of comments from the White House and Trump saying that talks are going very, very well. Is it true? That is still the question to be determined. Over the weekend, does China come out and say, no, talks didn't go well? Because if they come and do that, we'll be down 500 points. So we're just wait for the next headline. The headline overnight, obviously driving us up 300 points, is that talks are going well. That's all that matters. Algos are just trading up 300 on talks going well, down 300 on talks going poorly. And we'll continue this yo-yo for probably the next year.
I don't know. They're making it sound like a deal is. I mean, right now
they really are. They're really pumping that a deal is imminent.
It's done. It's done.
The market is. Well, there's hope. There's a lot of hope going right now. So just saying, if they, for whatever reason, China comes out and says no, that's not going well, or denies what has been coming from the White House, then we've got major issues. But China was even saying, I guess yesterday there was wasn't there commentary, Spencer, even coming from the Chinese officials yesterday that talks were indeed going well?
Yeah, well, I think more that talks are genuine. They emphasize that they genuinely want to work towards a solution. I think that was more the tone.
Okay. Well, what have they been doing for the last year? Not working towards a solution?
Hey man, go to the
market's so crazy, man. Joel, it's crazy out there. Crazy markets.
Yeah, well, I mean, I would just, the day that we don't have to talk about the trade war on this show will be...
That'll be your happy day?
That will be my happy
day.
We'll
be talking about the trade war on this show for another year.
Oh,
I don't think a deal's coming. That's my opinion. Maybe it's gonna, but I don't think we got a deal imminent. This market sure thinks so, because since we sold off on the headline, and this was just 2 nights ago when we got down to 288 on the SPY.
100 points. 90
points.
On
the headline, we have now rallied 80 straight handles on the potential. Obviously, that was denied. Chinese had come out and basically said that the talks were not going well, and they were going to leave early. Well, then I guess they didn't leave early, and I guess maybe the talks started going well. But we got down to 288 on the SPY that night, and we have been ripping and ripping ever since. So, if we just look, at the overnight charts, whoever decided to sell on that low is regretting it big time here again this morning as the rally does indeed continue for another day, another 300. I mean, it's up 300, down 300 every day. I guess we shouldn't be complaining as traders, and this is actually good for traders. I just feel for the investors out there who are like looking at this market and saying, what the hell? What do? I don't know what to do. Are we getting a deal? Are we not getting a deal? Should we be buying stocks? Should we be selling stocks? They don't know what to do. I can't tell you. I don't know what to do in my long-term portfolio either. Tell you, I just keep trading the whipsaws though. So I am not going long over the weekend because I fear that a deal is not imminent. I don't know if I have the guts to go short. I wish I did, but we'll see what happens today. I mean, we still have a full trading day before we have to decide what we're going to do over the weekend.
All right, I guess
speechless.
there's I know. I mean, this is like deja vu all over again. So
it's every day we talk about the headline of the day as talks are going well or talks aren't going well. Just it's like Groundhog Day. Remember the movie with Bill Murray? Great.
Yes, movie. I do.
Groundhog Day, and he just kept reliving February 2nd every single day, and eventually he mastered it. So maybe we will eventually, as traders, master these upgrade or these headlines of China talks going well and China talks not going well. I mean, the algos appear to have mastered it. So maybe the human beings will master it eventually here too. So that's my thought process here on this crazy, wacky week and Friday that we've had.
And Spencer, I know you're going to say something, but did you come up with a topic for hot potato today?
Goodness!
I had a few other things on my mind.
We can do a hot potato at the end of the show.
He'll do it on the fly.
You got one?
That good?
We can do one at the end of the show. Yes.
Spencer coming through in the clutch. That would have just been a disaster with no hot. It's like what I look forward to all week.
But I was going to say though, if we're in Groundhog Day, who is Ned Ryerson?
Oh yeah, Ned. I forgot about Ned.
Yeah.
What is this saying he was saying every morning when he walked through?
Phil Connors is I don't know the whole thing, but he says it like times.
Watch out for that first step. It's a doozy.
Oh, you guys.
Okay.
Great flick. Bill loves it when we talk movie.
Right, but Dennis, can you at least feel better this morning knowing that, as you said on the pre-market show, things are doing what they're supposed to do, right? So the TLT is trading here. The banks are inverse to that. So that tells at least it'll be a normal day, right?
This is a textbook day for Dow up 300, S&P's up 30 / this is a textbook day. And what I mean by that is I'm seeing everything going green. I'm seeing gold deeply in the red. And I'm seeing TLT deeply in the red. So everything is normal when I'm looking at it from that perspective. So very normal day. What is very interesting is I have about 100 S&P stocks that I keep on my screen all the time. The only ones that are in the red on my screen right now, the only ones in the red are the gold stocks. I'm 100% green on all the other stocks on my screen, which is incredible. You usually see one or two, maybe somebody caught a downgrade, of these main stocks. But for the most part, and there is some downgrades there today, but I'm talking of the S&Ps here. I got them all green. Maybe there's an S&P stock that is in the red that isn't a gold stock, but I don't have one on my screen here. We did have Square that was initiated with a sell at Nomura, but it also got a buy rating from another broker, so that's keeping that one in the green. Otherwise, that would be one of those. And we do have. I do look at those pod stocks, and the pod stocks, man, they've been really hit hard. CGC down here again this morning. It gets a downgrade to sell, I believe, from Jefferies, going from my memory here. But I mean, for the most part, most stocks are up. So we can go anywhere. I would like to talk to pod stocks eventually. And now I don't want to start with a Debbie Downer, though, because the pod stocks, if there's any stock sector that has been the weakest, it has been this pod sector. We've been all over this. We've been, on the sell button here on CGC since $35, $40. Maybe even from 55, but I don't have the guts to sell when it's going straight up. Now it's $20. It's downgraded to sell here. Who's downgraded this morning, Spencer? Do you have it?
Yeah, I have to pull it
up. It's downgraded Jefferies to underweight. That's their equivalent of sell. I have it in front of me from the pro. So Jefferies downgrading. It's going to go to the $20. It's right there at critical support, the 2.0. But I mean, the trend on these things can't even go up on up days now anymore. And yesterday, the catalyst was HEXO, because it was a disaster earnings report, and that brought down every pot stock in the sector. But think about the tape yesterday, and every stock performing well. And then you look at those pot stocks, and they're all straight down. GWPH being the exception because it's more of a pharmaceutical play. It's still, I believe, best in breed, and that's the only one I think that isn't going to continue this, straight down parade here. But, they are oversold. They're due for a bounce. But I think still when you look at these 6 months from now, I think they're lower again.
I don't know what to say about just
They're just
this
so
canopy
ugly.
growth. I mean, I wonder what Constellation Brands is thinking.
Then we already know what they're thinking. They regret the purchase. I mean, they were trying to write some of it off the last quarter. Were they not? Wasn't there a big charge for CGC last quarter? And they were trying to kick that out of the earnings? Spencer, am I right? Did I make that up?
From Constellation? No, you didn't make that up.
Yeah, they said something, and they were trying to do it X, like taking that part out.
No. It was
What was it? It was something about the earnings, and they had one with CGC and one without.
Yeah, well, that's it. They just,
on the numbers.
Well, that's it right there.
Yeah, so they tried to remove some of the numbers from CGC because it's such an epic disaster for them. I mean, they overpaid. They bought it, they overpaid. That's the bottom line. And everybody got excited. The thing's $20 now, and they regret it. So if you think there's other companies that are coming here and going to start scooping all these up on the cheap, I don't think so. I think they're all scared. Again, it's the same story. The valuations don't make any sense. They never did. It was just a story, and the story is broken. They're worth something. These stocks aren't zeros. They still are viable companies that, some of them are going to make some money. But they're not going to make the money that their valuations demanded, and that's why they continue to roll down. But we don't need to talk the Debbie Downer or the pot stock sector. Nope. Let's go talk to everything else, because everything else is ripping here this morning.
I'll say 1893 though. If anybody's looking for a monthly level in CGC, if you've been waiting for that under 19 print, April 2018, you had an 1893 low. We're just sitting at the lows of the pre-market session. You may see that today. I'd put a bid out at 19 if I was trying to cover a short on it.
So let's go to the stock that is charging higher, almost at an all-time high. If it's not an all-time high, it's very close. It's within striking distance, within 60 cents of an all-time high. The stock that has, this is going to show you buy good companies at reasonable prices, you make money. This was a stock that everybody was throwing out at the end of the year. It got down to $140, $142, which is ridiculous because consider their cash, consider their, that they've still got a lot of products and they've still got some growth going on there too. One of the biggest positions in my long-term portfolio. I'm very happy it is, and it continues to perform almost all-time highs.
Need to get to 233.47.
Think it gets there today?
I mean, I'll go out on a limb and another 70 cents. I mean,
Bill says yes.
Yeah, at least I think it might. Let's see if it hit it in pre-market trading. You got to 33.50. So there's a zone for you, 33.50 up to the all-time high. The all-time closing high, which I also like to keep an eye on, that all-time closing high, boom, boom, because I know when we hit over 230, we pulled back a little bit. Let me see if I can pull this up here for Apple. But go ahead. When I find all-time closing high, Spencer, you can move on, or Dennis, you can move on to the.
Okay, so other stocks, we've got everything moving. We have some ratings here. We'll just go to those because they are ripping here this morning. We got RBC coming out with a note. They are upgrading ROKU. They are upgrading the trade desk TTD. Both stocks were trading up significantly when this note was released at 4 o'clock last night. They are continuing to rip here this morning. Obviously, the market helping them out now too. ROKU's up $8.
Well, ROKU getting helped out also by a little stake there from Ken Griffin, a 5% stake from Citadel in ROKU.
Big pop here. I mean, it actually did not perform well yesterday because it gave back a lot of the gains that it was, because it was up early in the morning and actually closed in the red. But now when you get, the two, obviously upgrade and the stake from Ken Griffin, that's going to make the stock go higher, and the stock is up $8 here this morning. So it's ripping. It's a party time again. I think we're going to challenge the 127.41 September 20th high. What happens there? I mean, now if you're coming in, you're chasing it. When we were, talking about it and saying, setting up the trade for you last week, stock was 101, 102, and we're like, you have a low to lean on, two lows in the same area, and that's what you look at. You want defined risk. We had it in ROKU, and that's, now it's up 25 points from there. So now if you're coming in now, you're late to the party, in my opinion. But still being said, if you're in it, I mean, there's no reason to just get out because the stock's ripping right now.
Yeah, I mean, it depends how late the party goes, right?
Oh, yeah, it could go for a while.
Yeah.
I'm just saying, I'm not coming in when the stock was 101 a week ago, and now I'm going to buy it at 125. You're doing it backwards. You got to buy stocks on weakness when they stop going down. That's what we saw with ROKU. Gave you an opportunity. Whoever took that opportunity, congratulations. I wish I would have been with you, but I did not.
Let's see. We're right at the highs of the pre-market session. Dennis talked about the daily high at 127.41. That could be a good target. That's $3 away. Things really open up after that until 134.88. I don't think we'll see that today. And longer term, if you're looking for a target, you're looking at that 50% retracement. You don't have to wait too much. 137, we'll call 137.50 is half of your move back from 176.55 to gotten single digits, got to 98.08, little double bottom there in the 98 handle and off to the races. And there was an upgrade yesterday too, right?
Yeah. Who upgraded yesterday or 2 days ago when it went from 108 up to 117?
Let's look in the
Who
pro.
was that?
It was somebody that wasn't big, and that's why I was like, I wish it was somebody bigger.
It was, hey, Macquarie's okay.
Macquarie's okay. I wanted it to be like Goldman or Morgan or Citi. I wanted something big. I was greedy. So anyway, I should have bought it on that upgrade because it was waiting for it. We said it was waiting for it, and it ripped on it. So hindsight capital makes a lot of money.
It sure does. But trading at
trade
the
desk too. Joel.
Yeah, TTD.
RBC upgrading the trade desk, TTD. This is a stock that's been in the gutter. So this is a stock that's
this is a good one.
This is potential to go and it is going because it's been in the gutter. This was $290. It wanted a vote of confidence. It gets that vote of confidence. You got a couple highs, pesky highs in the 196, 197 area that I'm just looking. Where I'm pointing now, 195.34 actually. So we'll see what it does there. But on pullbacks here, this could be a buy.
Yeah, let's see. Man, this thing is a wild one, and you could still get in this one up $7.50. Even I'm not thinking of shorting this off the open. Potential targets. Dennis mentioned. We're right back up from the highs of the last few sessions. This thing must have had a really weak close. Yeah, it did. You get 194 is a decent area. Really the last three highs have been right in this 194 area. So let's see if we can take that out and above that 195.11. But let's see if we can clear 194 off the open.
Also catching an upgrade here from Goldman Sachs is WDAY Workday. They're upgrading this to a buy, and the stock is ripping up 3% here this morning. Again, here's a stock that's been in consolidation station and it gets a vote of confidence. You know what? Stocks all look good. These cloud stocks that have been beat up here, they could go, man. Twilio too. I'm looking at Twilio trading up $2 here. Looking at CRM, the cloud has been left in the dust here on the recent rally, but you know what? A couple stocks getting rating changes here can sometimes change that. Workday getting a lift here. I'd watch for some sympathy moves with CRM. Obviously, they're going to be up because of the overall market, but I think these are stocks that could get, start to get some life here too. Capital could flow into these.
Let's see here. What do we got? We're trading at the
up
highs.
$5.
We peeled back a little bit. 181 is your pre-market high. That's only $1 away. So we'll see if we can take care of that. And then what do we got in the 180 handle? Man, this thing has just been under 180 for a long time. There's nothing in the 180s. There's absolutely nothing in here until
there's room here to go.
Yeah, 190.
I'd pull backs on this too. I hate buying when stocks are up $6-7, but if you can get it up $3, and you give yourself maybe the previous day's low to stop out, there's room to 190 on this.
Really? Yeah.
It really is. This then there's room to 190. I don't mind this at all either. I mean, these are stocks that were storied stocks that really carried us in the first half of this year, and then the story cooled off. But, in some cases, the story is broken. In some cases, the story cools off. In the case of Beyond Meat, I believe the story is broken. And that's why I believe the stock will be under $100, potentially even by the end of the year. I said a year from now when it was 170 or 180, and actually I think it went up to 200 after that. So obviously my timing wasn't great. I still think it's going under $100. I'm going to up that target. I think it'd be $100 by the end of the year. Sorry, 3 months. So I was saying, so I got 2.5 months. I was giving myself 52 weeks, which I'd still have 10 months. I'm up, and I think Beyond Meat, the way it's going, could be under $100 by the end of the year. So that's a storied stock that is broken, in my opinion. The story is broken. We've had as good a news as you're going to get. You got a McDonald's test. Yeah, you got a McDonald's test, and you got the big gun, and the stock didn't respond well to that at all. I'm telling you, there's just overhead supply. Valuation's ridiculous. Story stock that is broken. The cloud stocks are storied stocks that cooled off. Big difference between cooling off and broken. Broken means they're going to continue to go down, in my opinion. When they've cooled off, it means the story could get hot again. It's like Square. I believe the story is cooled off, but I don't believe the story is over. That's why I'm long Square. I'd like to be long some of these cloud names. This valuation scare the hell out of me. But I think the story could get hot again, especially if we start to make new highs in the market. These are the kind of stocks that will carry us. So keep an eye on all these, on the work days, on, and obviously Spinner saying Coupa Software. That's really performed well. I just looked at the chart of that, and that's, right near the highs. So that's been an unbelievable performer, COUP. But keep an eye on the cloud because these stocks could get some life.
Square caught an upgrade today too, didn't it, Spencer?
Yeah. So you have two analysts who have analyst wars here, Spencer and Square.
We've got an upgrade at Susquehanna from neutral to positive. Why can't they just call it buy like everyone else? Neutral.
Annoying. They have to be special.
Neutral to positive.
Although I love you guys, Susquehanna. I used to do a lot of business with them.
Who is the downgrade? Actually, I'm forgetting. I can't pull it up right now.
It is Nomura. It's not a downgrade. It's an initiation at reduce.
Initiation.
And why do they have to? So we have two analysts that don't use the word sell, but they use reduce.
Yeah.
But they announced a $49 price target. So that would sound pretty bearish. And if the market wasn't up through 300 points, and if, we didn't have this other rating from Susquehanna, Square would probably be down $2 on this. It's not, it's up $1. So they're going with the analysts, Susquehanna and the upgrade over the reduce at Nomura. But keep an eye. This is stock is in consolidation station 2. I mean, I am long it. I believe in the long-term story. I stuck it in the retirement account. It kind of scares me a bit, but I believe it's a valuation that it can grow into. This is a company I believe is going to make money. I do believe in Jack Dorsey as well. So that's why, but I look at this and I'm like, man, this is not my kind of stock. My kind of stock is a lower PE that pays me money. It's not Square, but you got to have a few, high flyers in there. And I think Square could start high flying there again. But it's got a big level. It's got
63.
It's got to get through this. And this is a big day for it. Can it hold up, or does the Nomura reduce, spook people, and do they start selling? Because if they do and it doesn't hold up on a day like this, that's not good news. So it's a big day, big important day for Square. I'm in from right around here. I bought it a couple times. I bought like 64 too early, and then I bought more, I think around 59 or 60. So I'm averaging, I think, like 61 or 62. So I'm in from right here. I'm flatting it. And I'm still holding on to it.
Yeah, just for the kind of technical analysis, Dennis talked about it earlier in the week about keeping things simple. I mean, 62, 63, that was yesterday's high. But if you go back over the last couple weeks, you had a 62.99 high, a 62.92, 62.85. So we're trading above it now, right? 63.05 is your last print, up a stick. So let's see if it can hold that 63. I think this thing's got some jets in it, but that has been resistance in the past. We'll see what happens today. But 63, nice long-term level. Things really, I mean, I see some other highs, but 65.05, if it really got ripping today, that's your August 23rd high.
Continuing on this, all these tech stocks here and all these ratings, there's just a ton of them. It was a downgrade. CrowdStrike, I believe that was Goldman.
Yep.
CRWD. So it is trading down today. If you're wondering why CrowdStrike's not participating, that is the reason. CrowdStrike's interesting around 50. I don't know if you're getting back down there to those lows. You've come down a little bit here yet, but you know what? This is the kind of downgrade that could get bought because you're on a pretty good day here. You have a lot of other stocks in the sector that are trading higher here. I wouldn't be surprised. I wouldn't be selling this one down. I'm almost inclined to buy this one. We'll see what it does, but if it starts to show some life right after the open, this is a stock that could actually turn around and close green. So just stay on this tape. I mean, if the tape holds up. So, just keep that in mind if you're trading the CRWD.
We're trading on the lows of the pre-market session and comes in at 59.08. Man, if you really want to get this on the cheap, maybe wait for $57. That was your October 3rd low was 56.75. But I think you're going to have to step up it. I don't even know if it's going to get down that low today, but that's a good area. Coming back on the upside here, the bottom of yesterday's range was 60.40. But I think if they does this one of these opening low reversals, you could easily see the close in this one at 61.41.
And then you got Deckers. We're just moving away from the tech stocks. Deckers getting it up. We're going through all the ratings here right now, the big ones I'm grabbing. DECK grabbing an upgrade at Spencer. You got it? DECK. I'm looking at the pro.
I saw it. I got my sheet here.
I saw it, and I didn't write down.
Where are you, Spencer?
Oh, no, I'm here. I was on
Stifle. You could call it Stifle. I call it Stifle.
It upgrades to Stifle, Nicholas.
What's a Deckers chart look like? It's been a while. It's got room to 150. I'll say that.
150.
I don't really want to come in here and well, it's an odd lot to trade 150. Whoever
Okay.
bought 150, that's getting a little bit excited in my opinion. But it could trade there. I mean, it's been 146.57. There's an odd lot bid there for 90 shares. So it is, upgraded here today on a big day. So it could get to 150. I tell you, I'd almost be selling if I was 150.
149.92 is your high for the month on October 1st. So that's a nice one. Above, and I think there's another high in that area too at 49.13. So we'll see. We'll see if that 150 target can actually trade there with some stock, but little pop up in retail here.
And then we've got JD.com catching an upgrade as well.
JD.com.
Yeah, JD. It's been a while. JD's getting upgraded at 86 Research.
What is that?
Well, I've heard of them, but I don't know how influential they are. But they're influential on JD this morning because JD is trading up 2.5%. This stock's been doing really nothing. I mean, all these China stocks, let's really put it in perspective. Look at the EM. They stopped going down at least, but they had a pretty rough September. They gave back a lot of the gains. Like early September they ran, late September they sold off. So they stopped going down at least. I mean, the one you can always look at is Alibaba. It's always a great indicator too. But you can look at these, HUYAs and IQs. They've really come off the highs. And JD.com is obviously a little more of a company, or like a little more stable companies than those other ones. But it's come off too. So there's room to 30 on JD. I'll give them that, but there's a lot of overhead supply. So I'm not getting real excited about this one.
3 highs just at the $30 area, 30.01, 30.25, 30.06. That was from late September. So there's a nice target for you in JD.com. And whatever happened with was it the CEO got in trouble at Minnesota? Spencer, you know what I'm talking about?
Was that JD?
That was JD.com.
Oh, nothing ever came of that.
Joel's got a memory. He's me and Spencer. He's got the memory.
Nothing. Yeah, no, that was last year, if I recall. Nothing ever came of that. He was allowed to leave the country, and I think that was that. I don't really know.
Man, they pounded the stock. I think that's when it made its low. I think it was.
How low did we get?
At the end of 2000.
Got under 20, eh?
Yeah, 1926 was your low in December of 2000.
It's a good example, though. Like, look, this is how, if you want to, call a bottom, you got to wait till it stops going down. I mean, you could have called it at 35, but then when it broke down, you wouldn't want to be long it from there. But then it just kept going down and down and down. And if you're trying to catch the falling knife, you got run over all the way from July. I'm looking July, August, September, October of 2018. Stock just kept going down, kept going down. Finally, in November, we get below 20. And then we had a little rally, and then we came back down and tested. And then we had a little rally, and we came back down and tested. And we had a little rally, and we came back down and tested. Could never make a new low. So it gave you an opportunity because it stopped going down. And then it started to rally, and then it obviously rallied over 50% from that point in time. So the best way to play these things, again, when they're going down, is not be a hero. Don't try to call the bottom because a lot of times these things do continue to go down. Wait till you got 2 or 3 lows in the same area, just like on ROKU. You wait until you got 2 or 3 lows in the same area, you don't get burned. You could have said that, but back when it was 140 ROKU, but then it took it out, and then you got to get out. So when they start making new lows, you got to go. Just like back on September 27th to September 28th, if we would have made new lows, you'd have to get out of those. And just like when I was setting up the trade, I was like, you buy at a 101 and you sell if it goes below that low of 98. That's how you set it. You're risking 3 points, and now you'd be up 20. That's how you set up trades. That's how you control the risk. So, and so just looking at other situations where it's like stocks like CGC continuing to go straight down, there's no reason to be a hero. Wait until you got a couple lows in the same area. I mean, stock's making new lows. Why be a hero? Wait till you got, a couple lows in the same area where it stopped going down, and then maybe you can say, okay, they're starting to show some life. There's no life in this pot sector right now. It's still people selling like crazy. I mean, Rjr Cannabis, which was one I had in my portfolio for a while, I sold it at $8.50. I'm so glad I did. It's $3.72. I mean, and it's made new lows again on the move yesterday thanks to Hexo, HEXO. So just, people naturally want to buy what is cheap, but you got to wait until you got a couple lows, wait until they stop going down. Because I've done this so many times myself. I mean, I just did it. I'm guilty of the same thing. I did it on Sarepta, and I got punished for it. So, you've got to, sometimes, listen to your own words too, on trading. And I don't do that. I was guilty of myself. So that's why I got burned on Sarepta.
JD.com, real quick
Yep.
here. You were talking about, a couple lows in the same area. This one was weird. It gapped down. This was, and when it made the low, but you had 2 monthly lows, a nickel apart, 1921 and 1926, your November, December lows. So that's nice. I mean, nice round number by the $20 area. Of course, that's looking at it in the rear view mirror. But, institutions stepped up under 20 or large traders and put it in the bottom there. We're getting asked about AMD here. And AMD has been quiet. Look at this. Up 52 cents, 28.90. What do you think here, Dennis?
You got a low to lean on.
Exactly.
So I will say if you want to go long, it's okay. 27.43 is the low of the move. If you're buying it here, maybe I don't want to buy it on a day that's trading up 3% or 2%, but maybe if it pulls back, you get 28.5, you risk yourself $1. And you say, if it makes a new low on the move at 27.43, I'm going to get the hell out. So if you are inclined to, buy AMD and you think the story could get hot again, which it very well could. This was a very hot story that has cooled off. I'm not saying the story is broken. I'm saying it's cooled off. There is the potential that the story could get hot again and the stock could start taking off. My one concern is that a lot of the other chips have actually performed very well. NVIDIA obviously is up near the highs, and it's your direct peer. Intel has come back quite a bit from the lows, and it's performed pretty well too. Applied Materials, if we're moving on to LRCXs and Applied Materials, have performed very well as well. So there's a reason this thing is having some relative weakness. So I'm not sure I want to set that trade up, but if you want to do it, I will just say you need to stop yourself out if it makes a new low on the move, which is at 27.43. So if you're buying it, don't get married to the position. You can try to play for the upside, and there might be there, but I would be very cautious if that thing took out that low of the move.
I don't know when to buy it, but I'll tell you that every time they announce something with Google, a Google chip, that seems like was the top of the last couple rallies, got it up to like 33, 34, and then it spooked people at 35. But there's just the only reason I mentioned it's an opportunity. Like when you hear this fantastic news and they jamming on something over, something that's forward looking. So we'll see what happens, but quiet. And the fact that it's been a little bit of a laggard with the other chips.
I don't like the relative strength.
Yep.
That's the one thing that's probably going to keep me personally out of the trade. But like I said, you can put any trade on. I'm going to, I've said this last time on the show. You can put any trade on as long as you have a contingency plan and you know where your out is. So, I'm not going to argue with anything. I argue with the person that just buys it. And then they say, well, if I'm down it, I can't sell now. That's the type of trader that will not last. This game is all about discipline. I've been in the game for 20 years, successfully making money every single year in my 20 years of my trading career, at least in my trading account. I know the investment account goes up and down. But on the trading account, I've made money every single year. And that is because I'm very disciplined. And I get out when I am wrong. I don't wait for the stock to come back. I don't go in the hope trade. In the portfolio, maybe I do it differently. Maybe I should do it differently in the portfolio, but we're talking trading here right now. And you can put any trade on as long as you have an out.
Let's do one. We do have a couple earnings here, and we kind of glossed over them. But let's do APHA and Fastenal trading up $3.
After had earnings?
Well, let's do one of them because it's 8:34 and we're back.
Okay, I thought I had it.
So
Did Afri have earnings? I didn't know that.
Freya and yes,
too.
Did they have earnings? They were.
I
on the
don't know
calendar.
where Joel's grabbing that from.
They
I
were
didn't know they did.
I thought they were on the calendar, but I don't see them.
No, I don't think so. I don't think they had earnings.
Let's do
No.
Fastenal this morning. EPS
Let's
beat
do the
37
Fastenal then.
cents, 37 cents versus the 36-cent estimate. Sales 1.37 billion, in line or a slight beat there as well. So barely beats on the top and bottom line for Fast this morning.
Reports on the right day. This is just so silly, but this is the way this market is. If you report that same report on a day we're down 300 points, the stock is probably down. So reports on the right day and everybody's excited and they find a reason to buy it. So anyways, getting right back up. 34 is huge for the stock. It's getting right back up to that point, 34.09. that would be a major resistance point. We're opening there right now. I don't know
And
if I'm coming
that's
short,
it. That's my
but
comment.
that's a
3409.
huge number.
Yeah. Yeah.
There's even 20,000 shares to sell there right now in the pre-market. Somebody's saying,
Really?
I get out at that high. Yeah, they don't usually show that kind of hand in the pre-market.
3450. You snuck up there earlier here, but I don't know. With 20K standing there, that's a big order. We'll take a look. So what do we got on the docket here? 8:35, Spencer.
We're going to take a quick break and grab our guest, Joe Saluzzi. He is
Nice.
a partner and co-founder at Themis Trading. We'll be right back in a moment here with Joe. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick, joined now by our guest, Joe Saluzzi, partner and co-founder at Themis Trading. Joe, good morning.
Good morning, gentlemen. How are you?
Doing pretty well. So, Joe, let's get your reaction here. The brokerage fee wars seem like they've come to an end, right? We've got 6 or 7 or all of them, all the major ones getting rid of their commissions now. How do you feel about what this really means for the average retail trader?
I mean, and really, is it an end, or maybe one day they'll start to pay people for trading? It wouldn't shock me, right? I mean, there is a model here for the brokerage firms where they're making money. The retail brokers are obviously making money. Free is not free for them. They are making money on other things, as other people have talked about, whether it's cash balances, advisory services, but more importantly, payment for order flow is the one that everybody talks about, and it is certainly the most controversial one. This is not a new controversy. We've been talking about it. Dennis has been talking about it for a long time. This just makes it worse, right? It makes the ability to send an order to a market maker or somebody who's going to pay for it that much more appealing for the retail broker, because they're not making money on a commission. So what we anticipate, and I think Dennis agrees, is that more of this flow is now going to be ending up off the public markets into the market makers, because they're paying for it, because the retail brokers want that payment, and that might change the way trading is done. That might change order books. We don't know yet. We'll see how much flow gets put in there, but it's certainly, there are repercussions. This is not in a vacuum.
I mean, this is something, obviously that we've talked about, Joe, on this show even in the past. I mean, there's hidden fees involved with this. And the hidden fees can come in a number of different ways. I was making an argument the other day on Twitter. It was a great article from the Financial Times talking about hidden fees. But I've argued that, these orders, so the retail orders get routed away from the public exchanges. And what happens is the off-exchange market maker can basically match the displayed quote. But what is missing here is sometimes the displayed quote is not the best quote. And there are hidden orders on the exchanges. There's also odd lots on the exchanges that these orders don't have a chance to interact with. So for instance, like if I'm looking at like IBM right now, I see an odd lot offer at 142.97, but the best offer is looking at 142.98. I mean, we see this all day, especially on a stock like Amazon. It's all odd lots. So, right now they're saying the best market is 139.20, but I can tell you it's 139.27 for 50 shares, or, Google's the same thing. So the best price that they're matching isn't the best price. I mean, here's a great example on Alphabet, which is Google. 120 or 1220.72 is the best market that the SIP would be showing right now. But I can tell you that there's an odd lot bid at 1221.11, which is almost 50 cents higher than what the best bid is. So if you're selling into that, the off-exchange market maker can basically print your order at 1220.72 and doesn't have to give you that 1221.11, which is a 41 cent better print. So that's my concern.
Right. There's an argument, Dennis, about of those high-priced stocks, whether or not those odd lots should be in the quote. I believe they should, and I think people are even talking about what is a round lot now. Is a round lot really 100 shares when you've got a $1,000 stock, or should a round lot be 10 shares? And they're thinking about maybe changing that definition, which would maybe help in your scenario. But I think you're right, and I think that what's happening is we're starting to the public quote is not as powerful as it was, right? It's not necessarily the price anymore because of all of this intermediation in between the quote and listen, this is a business model for the market makers. They are going to guarantee quotes. They are going to put up a certain amount of shares. They do, market makers do a good job at it. I think for the most part, they're going to give fills that they say they're going to give fills. Right. And I hope that the retail brokers are holding them to it by saying, hey, if you're not going to fill me when you said you will, we're not going to send order flow to your destination. But I think it is still a bigger issue. And I think we've talked about this one issue, Dennis. Suppose you were the offer. You were the guy, if they decide it's a 5 cents wide spread, and you could decide that you want to make it a 3 cent wide spread by placing the stocks 5 cents, 10 cents, and you make the offer 8 cents by putting a limit order out there. And now someone wants to buy your 8 cent stock, but you don't get the trade because a market maker steps in front because the retail payment for order flow sent that buy over to the market order and to the market maker rather than you. That's not fair, and that's an opportunity cost that no one's talking about.
Zero
where the guys. So where's your incentive now to set price? You don't have, and that's going to hurt price discovery, and that's what I'm afraid of public markets.
And welcome to the small cap world. This is why the small caps are a mess. It wasn't the tick size. The tick size, the access fee pilot's going to be interesting because there's some stuff there. But I mean, this tick size pilot, which was an epic fail for 2 years, it was never the tick size. What the issue in the small caps is you're letting off-exchange market makers simply match the best quotes, and nobody wants to make markets in there. So you bring up these small caps and the spreads are 50 cent wide on some of these stocks, because if I go 49 cent wide or 48 cent wide and tighten it as a on exchange market maker, the off exchange market maker can just match my price. So the only time I get it is when it blows through me and I get beat on it. So what happens is we don't trade those stocks. So you have exchange. So this is why the small caps are a mess. If there's any regulators listening, this is the reason the small cap space is a mess. The reason the big mega caps aren't a mess is because you have other things happening there. You have a lot of high frequency, rebate cap. You have different things happening there. A lot more competition happening. A lot of more traders trading a stock like Bank of America. So it's a different story. But in the small caps, it's a mess because of off-exchange market making.
And I think, Dennis, you made the point before, and we've talked about this when we talked about the transaction fee pilot, which is still hung up in the courts, and hopefully will be, the SEC is starting to collect data now, but you said, hey, it didn't go far enough and that it should cover off-exchange market centers and market makers as well. And I agree with you. And especially, at the time, I kind of said, well, let's just take it one step at a time. Let's start with with the exchanges and we'll work our way through. But now with all these free trades coming, who knows how many trades are now going to be sent off to market makers, and then they're going to be competing on price, and maybe they're going to start increasing the incentives. Who knows how that's going to change? So when that much flow is now going to be shifted off the public markets, well, then you have to test, and if you're going to test for access fees in the public markets, you have to test for access fees on the private markets in this sense, and you should extend, the SEC should extend the transaction fee pilot to all destinations, off exchange, whether it's a dark pool or a market maker.
I completely agree. I mean, this was a point that we made in a comment letter back to the SEC, and obviously it's my personal opinion. But I always come with, when I talk to the SEC, they look at, here's a prop trader trading on the exchange, and he wants more order flow on the exchange. So I have a little bit of a conflict of interest. So when it comes from my mouth, they probably say, well, we're not going to take everything you say. But I mean, I just look at it from a public market perspective. I look at the small caps, and I think if we continue to drive flow off exchange and we get our public pricing from the public exchange, as there's less people trading on the public exchange, those spreads eventually are going to get wider.
Yes. Now here, I think the exchanges are trying to fight back, and they're just the exchanges are so conflicted. The three major exchanges are very conflicted in that they sell data and they sell colo, and they forgot about, I think, their real job of matching buyers and sellers somewhere along the line. But they've got the CBOE's EDGX recently came up with a proposal which just got approved, which we actually wrote letters against. I was against this proposal, and I'll tell you why in a sec. But it's called the retail priority proposal, where they're going to allow quote unquote bona fide retail orders to skip the queue, to jump the queue essentially on their own exchange if it's a retail order. So in other words, they're going to put them at the top book. Say there's 10 guys bidding 10 cents. The retail person comes in, they can jump the queue. They're obviously going to, pay for they want the retail brokers to send those limit orders back to the exchange. They're paying for that order flow. Here's the catch, and there's always a catch with these exchanges. The retail order will be flagged in the data feed with an indicator indicating that it's a retail order. That is an enormous piece of information for any market maker, for any HFT. They see that, they know it's retail, and they know it's not institutional. Okay, this is order information leakage like I've never seen before. It's more and more. And they're defining a retail order as anybody who has 390 orders or less in a particular day. That's a lot. Okay,
Not a lot of trades.
That's a lot of
trades.
trades. That's one per minute, right? That's a lot. So
these are high frequency day traders.
Right. I mean, come on. Who's actually doing that? So you're going to have all sorts of more, and they consider this is what exchanges call competition. They create new order types like this, but it's just messing up. It's even making it more complex, more conflict. Instead of trying to simplify this damn thing, they just keep doing that because the themselves, to get the order flow. The market makers trying to get the order flow, but who's in the middle? The clients, right? And is it really good for us? So these are things that this is deep in the weeds market structure that most people don't talk about, but that's underneath. When you peel back the onion and you take a look at the market structure and you say, is free the best thing in the world? I say no. I say there's all sorts of games underneath which direct these orders to certain spots, which reveal information about the orders, which is how there's business models are being built, which is why the exchanges are huge franchises. Problems here still.
We're on the line with Joe Saluzzi. Joe, I just want to ask you here, these brokerage stocks were broken before this, and I know you can't comment on individual issues, but this sector, maybe it stopped going down. I see AMTD stopped going down. Schwab, who kicked off this bonanza here, is it just, are they dead? I mean, I know they have other ways of making money here, but you talk about broken chart, broken stocks. Is the story broken, or is there still some value here in this sector?
Well, it's like I said, I'm not going to comment on the stock price, but it is a major change to some of the models which rely more on the commissions.
Correct.
Can they offset this with other revenue? Probably. There are other ways of making money. They are making money. Obviously, we all talked about how they're making money. Can they get an increase in payment for order flow if the market makers start to compete more for that order flow? Maybe. I don't know. But I mean, certainly, stocks react quickly nowadays, and they shoot first and ask questions later. So I don't know. I don't know if their particular model is broken. I do know that the in general, this, when you say free, it's not necessarily free, and order routing conflicts are still there. So, and they're at the middle of it. Retail brokers are right in the center, heart of the matter here, where who sends the flow are the retail brokers. Now, on the institutional side, we have the same issues. There are certain algorithms that institutions and brokers use that are sending it to the highest rebate venue, which is why we've got this new 606 report coming out from the SEC, which is going to detail order routing. So it's really difficult to figure out what's going on underneath, but these models are difficult. Like I said, I really can't comment on the stock, but it's interesting.
What do you make of this, trade war headline that we get every day? It's a deal with China, no deal with China. These whipsaw 300 points up, 300 points down. I mean, a lot of it's obviously algorithmic driven because, you see this headline coming within, 5 seconds, the S&Ps sell off 30 handles. What are your thoughts here? Just how are you navigating, as an institutional trader, how are you navigating all this chop?
Yeah, well, like I said, you see it during the day, and sometimes those headlines are I think they're just being machine readable news, and they react a little bit too quick. And if I'm a buyer, I'm taking advantage of that situation. If all of a sudden, I think there was one yesterday, and the stocks drop pretty quickly, and I'm a buyer, I'm scooping up as much as I can at that point because I know it's going to revert, and I think the headline's BS or whatever it may be. And that's our job, right? Our job is to pick spots and to make sure we get the best price for our clients. But in general, I think the market is, like you said, it's range bound right here. I think this will clear. Okay, we're not going to have a China trade war forever, folks. We are going to clear this situation.
You guarantee that, Joe?
What's that?
I said you're guaranteed it won't last forever.
I guarantee it. I guarantee it won't last forever.
Okay.
And listen, it's going to clear. It's a political thing, And when it does, I think the market's been capped for a while, waiting for that. So we will get that, that push up, whether or not it lasts, I don't know, but we should get a significant push up once we get some sort of deal. And then we'll see. And then maybe, just maybe we can go back to fundamentals and start looking at earnings and growth and economic numbers and
That'd
get rid of the political noise until the next noise starts, right?
All right, Joe Saluzzi, partner and co-founder of Themis Trading. Joe, thanks for the time as always, and have a good weekend.
You got it. Thanks, guys. Have a good one.
Thanks, Joe.
Thanks, Joe.
All right, it is 8:50 on a Friday, which means it's that time.
Uh-oh.
Hot potato, hot potato. Hot potato, hot potato. Hot potato, hot potato. Potato, 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 potato.
All right, so Joel is becoming a father-in-law this weekend. His oldest daughter is getting married. In honor of this glorious occasion, today's theme is marriages in business. Yes, M&A transactions, folks. That is the category of trivia today.
Spencer pulled a fast
Joel's
one
gonna
on
rock
me here.
on this.
He pulled a fast one on me. I thought he was slacking.
I'm full of surprises here. All right.
Oh, wow.
So I've only got 8 questions for you today. So we'll do 4 and 4.
Close your chat, Dennis, because I don't want you cheating again.
Need an edge.
He laughs. That's why you know it's true. When he laughs, you know it's true. Okay.
No, I've been good. I haven't, actually.
Okay,
I've
let's
been
go
really
ahead. All right, let me channel my inner marriage markets. Okay, go ahead.
Okay, first one is to Joel. Joel, in late 2016, Microsoft paid $26.2 billion for this social media company.
Oh, give me an
easy.
What is LinkedIn? LNKD.
Ridiculous question. I better get an easy one.
You will get an easy one.
All right.
Okay. Actually, this one's pretty hard. So we'll skip that one.
Give me the hard one.
No, I'll give you a. Oh man, for some reason I gave you the harder ones. I don't know. That was an accident. Okay, Dennis, I'll just give you this one.
They're mean to me.
The largest M&A deal of the 1990s involved a German industrial conglomerate, Mannesmann, getting acquired by this British telecom company for $304 billion in today's money.
In the 90s?
1999. Yup. German industrial.
Goodness, you're going back to my first year of prop trading. And who was the acquirer? Did you give me a company's name?
The company getting acquired was in the German industrial conglomerate. They were acquired by a British telecom company. What was that company that acquired them?
British Telecom.
For 304. Well, at the time, it was 202 billion in 1999.
I have no idea.
Right. It was Vodafone.
Oh man, I would have never went there.
VOD, is that still around?
Yeah, it's still around. I would have never guessed Vodafone though.
All right. Joel.
Yes.
The third largest acquisition of the 1980s, Philip Morris, paid about $13 billion for this food company, only to sell it in the 2000s.
What is Rjr Nabisco?
Brent thinks he knows. Joel, that is incorrect. No, I'm sorry. Dennis, do you want to steal?
Give it to me again.
The third largest acquisition of the 1980s, Philip Morris acquired this food company for $13 billion in 1988, only to sell it in the 2000s. Rjr Nabisco was a very good guess, Joel.
That was a good guess. They sold it off too. Who did they own?
Dennis is trying to steal.
I don't know. It'll take too long.
All right, Kraft Foods is the answer, folks.
Oh,
they had Kraft?
Brent knew that one. All right.
Brent knew that one. He wasn't even born yet. How do you know that one?
He was born.
Brent knows everything.
Okay, Dennis, for the majority, this deal was the largest deal on record for the majority of the 20th century. It happened in 1901.
US. He goes to 19. We go older yet. Holy cow! 1901.
Yes. U.S. Steel paid the equivalent of $15 billion in today's money for this other steel company that was founded by a famous robber baron who got rich by insider trading?
1901, Joel. If you could get this one, Joel.
It was the
Joel,
largest.
wait. Joel wants to steal.
No.
We're not good at the 1901 mergers.
All right. The answer was Carnegie
Jesse James.
Steel. Carnegie Steel. U.S. Steel acquired.
I've never even heard of Carnegie Steel. Have you heard of Carnegie Steel?
All right.
I have. So in the 1850s,
We keep going
General
over.
Electric.
These are like impossible.
No. Okay.
Holy cow, we're looking awful here.
Getting easier. Joel. The largest deal of the 2000s involved what two companies? It's very famous or infamous, I should say.
the largest deal.
Of the 2000s involved these two companies. Very infamous deal.
What year was it?
It happened in 2000. That should be a giveaway.
It happened in 2000.
Largest deal.
I'll give you another hint. Think disastrous deals.
There's a lot of disastrous deals in 2000. Oh, I know.
Would you talk about this?
I know.
Lucent bought Nortel.
No.
That's
I'm
close.
gonna say it's AOL Time Warner.
Dennis got it. That is right. All right.
As soon as said disastrous deals, I was like, it's got to be AOL.
All right. Dennis,
that's good.
America Online. Time Warner almost went bankrupt because of that acquisition.
all right, Dennis, we'll give you that one.
1-1, I think.
Yeah, these are tough. I got that one though.
Okay,
Yep.
this one is to Dennis. This one's a little hard, unfortunately. So I'll read you the whole clue here. In 1994, Quaker Oats acquired this beverage company for $1.7 billion. 27 months later, they sold it for $300 million.
How much did they acquire for?
1.7 billion, and they sold it for
wrote it off for 300 million.
sold it for 300 million. 27 months. I'll give you a hint. The beverages come in glass bottles.
I know what this is.
Joel's gonna get this. I have actually no idea.
I
who they
think
would've
I
bought.
do.
Is it no, I don't know.
Snapple?
Joel got it. Very good.
Joel, you genius, you.
All right.
Holy 2-1. I'm in the pressure zone now.
So that was to Dennis. So this one is to Joel.
Genius.
All right. Joel, in 1996, NBC.
This to Joel? This to me.
This to Joel.
Oh.
I stole.
In
Why?
1996.
Because you know it? Okay, go ahead, Spencer. I'm sorry.
In 1996, NBC, which is owned by GE at the time, partnered with this tech company to form the cable network MSNBC.
It was a tech company?
Yes. NBC partnered with this tech company to form MSNBC in 1996.
Comcast?
No, I'm sorry. Dennis, can you steal?
Well, MSNBC was owned like GE?
It was a partnership between.
Was it General Electric?
No, it was a partnership between NBC, which GE owned, and this other company.
Are you sure it's a tech company?
I'm pretty sure, yeah.
Because GE owned like
yes. And who was the company they partner with to launch MSNBC? All right, you both don't know.
Wait, let me guess. Wait,
no, Microsoft.
Westinghouse.
It was
Microsoft?
Microsoft.
Really?
Okay. So it is terrible. It is 2-1, and this is 2-1.
Last question.
This is the last question, and it is to Dennis. So this is for the tie.
All right, I'm gonna win right now.
All right,
tie. You can only tie.
That's in Canadian math. I win.
So we know that Skype is owned by Microsoft. Before that, Skype was acquired in 2005 for $2.6 billion by this other .com darling.
What year? In 2005?
2005, this other .com darling bought Skype for $2.6 billion. They're public.
Still public. Who did Microsoft buy Skype from? Wow, I really did really bad.
Was
today.
These are hard. I gotta say,
it's not. No, because it's not Google.
It is not Google. No, Dennis, guess something. Guess a darling.
Who owns Skype?
Think of .com stocks that were good. That's my
Amazon.
no, but that's not a bad guess. Dennis, give me something.
Tough ones, man.
Is it a big company or a small company?
I just get. Oh my god. You want me to tell you the market cap? I mean,
Yeah, that would help.
no, I'm not telling. The answer was eBay. Dennis, eBay.
No.
Man.
No.
No.
We need like the PayPal eBay and like the easier ones. These
So
are hard.
I
This is
maintain
the
my-
hardest one ever, Joel.
I'm sorry, guys.
This was the hardest one ever. He really killed our confidence here. I'm gonna have a terrible trading
the
day
old
now.
1901 takeover.
The 1901 takeover.
Oh
Yeah.
man. All right.
I was gonna guess like a railroad or something. I don't even know what it was.
Well, railroad
around
would
back
be a good
then.
guess in 1901. Those were big.
I know that's the only thing
All right.
that was around.
That's before
Okay.
automobiles.
Before we get final thoughts on this market here.
Final thoughts. I'm just so down right now. I'm trying to pick myself up after because anyway, imbalance. I want to give you imbalances here. So we'll go look here. Pfizer 141,000 to buy. Obviously, we're littered with buy imbalances here. JP Morgan 65,000 to buy. Alibaba 121,000 to buy. Even General Electric participating 495,000 shares to buy in GE. AT&T 100,000 to buy. Wells Fargo 82,000 to buy. They're all buy imbalances. This market is going. On targets 40,000 to buy. Market is up strong, although we are leaking here a little bit here. I would just say if you're coming in stocks and you're buying now, you are chasing. This is the definition of chasing. I would not be chasing this move. I wasn't chasing yesterday. I'm definitely not chasing today.
I'll just keep an eye on that pre-market high, 29.74. Look for, if you want to follow through, you're going to get over there, take that out 5 points higher, not much until really your next daily high is 86.25. If you're shorting this thing off the open, maybe mid-range on the session, that comes in at 29.58. That's only 10 handles away. In order to fill the gap from yesterday's trading, you get down to 49.5, but that's just if if you get a negative headline. But Spencer, good job with that. I'll see you guys on Saturday night. Dennis, I hope you can keep your health together between now and tomorrow
Shoulder,
night.
still fighting the shoulder. It's trying. I'm healthy. Just the shoulder's a battle.
So you will not be doing your robot then.
Well, I was doing a little dancing there, even on the hot potato. So you never know. I might get up there.
I think what he's saying is we can't call on him to help with the hora. That's definitely what he's saying.
Oh, to hold up the chair?
Yeah.
Yeah.
Dennis can't hold up anything. Okay. On that note, that'll be it for our show. I want to remind you folks to check out the Webull WeTrader paper trading competition on the Webull app. Win $11,000 worth of Amazon gift cards, a Tesla Model 3, or $40,000 towards your student loan payments if you have them. Download the Webull app to learn more. If you missed any part of our show, catch our podcast wherever you get your podcast. Please remember everything on our show meant to be used as informational purposes only, not for investing advice. Thanks to our guest Joe Saluzzi. Thanks to everyone in our chats. Everyone have a great weekend. I'll be out early next week. I'll be out at a conference in Austin Monday, Tuesday, and Wednesday, but Joe and Dennis will be around. Everyone have a great weekend, and we'll be back with you next week.